Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 19th of April. All right, now the key focus today is the UK CPI numbers, right? CPI across the board. Canada, a little bit weaker than expected yesterday, but it is the major focus for all the central banks. Now, just having a look at these numbers, now there's two key components here, right? You see two different year-on-year numbers. Now, the core CPI number, this is inflation without energy or food. Okay, and this is the overriding CPI number with energy and food included. Now, these two numbers, they have been working closely together, but I think I was just reading through some of the central bank information. There's a little bit of a change in the core CPI. It was down to the price of clothing and a few other things. So just keep an eye on both numbers. They are important, right? So previous numbers, yep, that's all great, but that's not the main thing we're looking for. We're looking for the range here. Okay, 5.8% for the core number, 6 to 6.2, and the CPI year on year, 9.5 to 10.6. So with the UK, you probably want to be watching both numbers. Now in the US, it's just the CPI number. Here, okay, they've been referencing a bit of both. And why I say that is when you come into a CPI release, that is the time to come over and check the central bank last statement. Now the MPC, Monetary Policy Committee statement here. Now, if you just flick down through here, I mean, it's obviously littered with context about inflation, okay? But the key part for me is they expect inflation to fall significantly in the second quarter of 23, okay? This is their whole assumption. So that's what you have to sort of factor in. So what we're looking for here is if it doesn't, well, that is something totally unexpected. And they are committed to making sure inflation gets back to 2%. Okay, we'll return to 2% to start target sustainably. Okay, that is the focus. So now the numbers, inflation across the globe has been falling, right? That's the key aspect of this. But what we have a situation is they will change policy according to get inflation back down, to return inflation to 2%, right? So when we look at the numbers, we're like, okay, look how far away we are. So understand if we get weaker inflation numbers here, and so the core CPI and just the CPI year on year, that's great, but they're not changing policy, right? It will lead to a slightly weaker sterling for sure. But what we need to get things really moving are these numbers to come out below the low of the range of the forecast. Okay, that's when you start to see things significantly change. Now, if they are up towards the high end of the spectrum, it means their assumptions are wrong and they may have to raise rates again. Okay, that's the implication. So that's what we're dealing with. We expect weaker numbers. Now, ideally, like 5.5%, okay, it's not out of the realm of expectations. And somewhere down around 9%, right? When inflation falls dramatically like this, and you've got to expect it at some point, then we will get a significant shift down in sterling, right? And this is where you need to bring it back to the whole equation. Now, before I look at sterling, right, let's have a look at the dollar index. Okay, now this tells us what the dollar is doing against the basket. Now, the euro is the major part of the basket. Sterling is the second biggest. Now, you can see here the dollar was drifting lower, but we are in a downtrend here at the moment. If you're focusing on this portion here, okay, and what we're trying to avoid mid-month, if I just blow this out a little bit, is where US policy and UK policy sort of coalesce, and you get this sort of price action where it sort of corrects, like the dollar is drifting or moving lower. You get some imbalance, some mildly say stronger UK numbers, you get a bit of an imbalance. It comes back. We reset that. Well, the resistance trend line's already there, and then it kicks in again. Okay, down. We've come back, tested the trend line, down. You got to expect this. This is how like currencies and instruments trend, right? They go this way. So you can see where we are. We're in a great position here for the dollar to go down, but that means we need strong sterling numbers, right? To get the ideal move here is a strong sterling outcome. So if I just come back over here, just to show you the charts on sterling now, because we've got an interesting setup as far as the fundamentals go, but do we have the technicals to match up? I don't know. Okay, so let's just have a look here. So on the hourly chart, You can see very clearly sterling is trending up, okay? And this matches with the weaker dollar, okay? And on the longer term chart, on the dailies, okay, it is still trending higher. We are getting to the point where we are going to get a flush out, either top side or downside. But policy changes that have been in place are slowing sterling down, which leads us to a weaker sterling, right? If we get that those inflation numbers out or below the low of expectations, and just to show you that again, right? What we're talking about is below 5.8 and 9.5. Well, we do get a weaker sterling, but will it be a great trade? Well, not necessarily, because we've got a situation, where the US dollar is going down. Okay, so if sterling goes down, we're sort of offsetting the whole pair, right? That's the situation we're looking at. Is we've got the major pair may actually run in, it won't slide as quickly unless we get dramatically weak numbers, because we already have a weak US dollar outlook. So weak sterling, you know what, it goes down a bit, but it's not going to shoot the lights out of it. So just be aware that this CPI number, the best opportunity to me is a surprise strong number, and it shoots to the top side, right? No one's factoring that in. Okay, so that's where we need to have a look. And the next point of the equation is to look at the crosses, because this is where you can get some real, like some great trading opportunities. If you see an imbalance, sterling against the Aussie, Kiwi, CAD, Euro, etc. So let's just have a quick look at that. Okay, now let's just look through the sterling crosses. Okay, this is something you should be doing, especially around the inflation numbers, especially also when the central bank is connecting inflation with their policy changes. Now, let's just look at sterling across the board here. Now, sterling against the dollar, you can see over the last few months, okay, it's gone up, what, 7 cents from, say, 118 up to, well, where it is now anyway, up about 7. Sterling Aussie, okay, it's up 10 cents to where it currently is. Sterling Kiwi up about 10 cents again. You look at Euro Sterling, it's only up 1 cent, but that's because Euro and Sterling correlate so well. If you look at dollar yen, it's up, well, about 8 cents to where it currently is, and Sterling CAD up about 5. Right, so you can see some opportunities here. Now, inflation, if it's exceptionally weak, do they change? Do they cut rates? No, they don't. But it goes a long way to that hiking cycle being over, and that is a negative impact, right? So looking across the board here, now I'm looking at the dollar in regards to sterling, and as I was showing you, the dollar index is up. If we get weak numbers here, and this is what I'm factoring in, right? Weak numbers. Sterling, yeah, it may go down, but it's not going to be in a hurry. Now, sterling Aussie, okay, it's broken through. Let me just clear the charts here. It's broken through and just trading sideways. So that, to me, it's already broken down, but we just need the final push. And this is the information we're looking for, right? But we need, obviously, significant variance in the data, really soft numbers to get the ball rolling. And what that will mean is, the Bank of England will be cutting rates potentially sooner than the RBA, right? We're sort of putting central banks against central banks here. So sterling Kiwi, now the Kiwis have been raising interest rates very aggressively. It has come a long way. So if sterling Aussie falls, you can be sure as hell sterling Kiwi will follow it. They correlate extremely high. Euro sterling, well, once again, if we get significant weakness in the inflation numbers, the Bank of England will be cutting potentially before the ECB, and that could be a negative impact. I really like the look of dollar yen. Okay, now, bit of an unwinding of the yen safe haven trade gives dollar yen an upward sort of bias, but right now, we've almost got an Ichiban strategy here, and this thing has come a long way, right? So to me, weak sterling numbers or inflation numbers, sterling yen's got to be definitely on the cards, okay? And sterling CAD, well, we had the Canadian CPI numbers yesterday. The month-on-month numbers a little bit stronger, the year-on-year weaker. And as you can see, the cross is a little bit in between. If anything, sterling is rallied a bit against dollar CAD. So that sets us up also for a potential weaker sterling number, a quick correction down in sterling CAD. Now, you need to take it a little bit further, right? Just glance through your charts, okay? And what I'm doing here is going into the individual charts. looking at, and this one here, I've got sterling. Okay, you can see it's sort of just drifted lower here on the hourlies, but on the dailies, right, it's still going up. So there's a bit mismatch there. There may be a short-term trade, weak sterling, but I don't really like it too much. Euro sterling also, it's just been sort of heading higher. If anything, the major trend, well, it's pretty uniform as well. Is there going to be a major trend break there? Don't think so. Now, sterling yen, short term, I've got a great technical level lining up with the cloud, potential Ichiban strategy. Now, dollar yen, you can't exactly say that's going down, but we will get a clean out through the short-term chart, the hourlies. Will that turn sterling yen around? Probably not, right? It's too early for that, but I just like the shape of that short-term chart. Now, sterling Swiss, just looking at the long-term chart, it's just trading sideways in a decent range. So, like the Swissy, too hard to work with for my liking. Sterling CAD, here we go again. We do have the longer-term chart just drifting down. Now, that could be the catalyst for a move, as I said, down, weaker inflation numbers there. Sterling CAD's got to be on your radar. And then you come into sterling Aussie and sterling Kiwi. Now, these two have come so far. It has already sort of broken down initially. We saw a bit of a change. It's drifting sideways, as it is on the longer-term chart. So really significant weak UK inflation. Sterling Aussie and sterling Kiwi, for that matter, should be an opportunity to get short. All right, so that's where we are, right? This is how detailed you can get. So what we're looking at by going into the crosses is you're looking for diamonds in the rough, okay? What looks good technically, okay? To me, sterling yen hasn't broken down yet. Now, that's got to be on your target. The fact that sterling Aussie's drifted through the trend line, I like the shape of that because it gives it easy room to move to the downside. Sterling CAD, okay, Canadian numbers yesterday, sterling has rallied. Weaker sterling numbers will correct that move, and there's 100 odd points in that easy. Euro sterling, well, it's a little bit sticky, but potentially an opportunity there. So what I'm trying to do by looking at the crosses is take the US dollar out of the equation and look for, you're weighing up policy against policy. So Bank of England against the RBA, the Bank of Canada, RBNZ, and the ECB. Who's at what stage of the cycle and who's getting ready to sort of potentially cut rates? Now, I don't think anyone's cutting rates anytime soon. Excuse me, but we are getting to a point where a significant shift in the data will lead us to some more assumptions around when they may change rates. Okay, so just coming back to the data. So you can place this back together very quickly. When you are looking at the numbers, all we need is the core numbers, right? They are trending down like they are globally. We want them below the low here. Okay, and not just below 5.7. That doesn't do much for us. And this is the thing, right? Putting orders in the market doesn't cost you anything. So if I set up my sterling charts, and depending on which instruments I look at, say sterling yen, I'm looking for something. You've got to have a plan here, say around 5.5%. Okay, that keeps me interested, and I'll keep that trade in play. If I don't get a number below 5.8, I'll just cancel the orders. And same for the CPI year on year, right? You're looking for something, I know it might be out of the reach, but you know what? We saw the US numbers roll back very quickly, say around 9%. Well, that keeps me interested, and I keep the orders on, and we give it a chance to impact. Now, don't forget, with this, we've got the RPI numbers, the retail price index, and then also the PPI, right? So there's a few other things coming out which could unsettle the boat, but the focus here is CPI. This is the first reaction that the market will have, and it's on these numbers, right? So for me, I'm looking for definitely sterling yen. I like the look of sterling yen. It's just got such a good shape. Sterling Aussie is going to be on my radar. But what I'll do is, right, we're talking hours before this data comes out, about 6 hours. So about half an hour before the numbers, I'll come back and I'll check everything. I'll check levels. I'll check what sterling's doing, see what all the crosses are doing. The pairs that I focus on, they're the ones that I want to be checking to see what's happening leading up to the release, okay? I would be putting orders in play or looking to trade live, and that's the best way to control your risk. Look for an opportunity, There's no, like, any number here does not mean they're cutting rates, right? But what we're trying to see, if the Bank of England is going to have to get more aggressive, adjust their plan. They are expecting weaker numbers, right? And I'm focusing on the trending data, which is all weak. So what does that mean? That means, you know what? I haven't told you too much about stronger numbers, but we'll see a spike in a number of different pairs. But I'm not really planning for that, right? The chance of stronger numbers at this point is a little bit far-fetched, especially the way global economies are sort of shrinking at the moment. So that's what you need to do. Focus on the best technical setup. Look for the numbers. Look for a significant weakness. If we don't get it, well, some of these instruments may sort of just reverse a little bit to the top side, but we won't get a significant change. What we need is really exceptionally weak numbers, and we'll get sterling rocking. The talk all over the news will be how aggressive the Bank of England needs to get with regards rates. Okay, don't forget, lending is tightened up. The inflation whole outlook globally is a lot weaker, and the global economy is choking. So which of these central banks will go first? Well, that's why you look at the inflation numbers, and that's why we focus on the key technical trades, and that's what you need to do in preparation for these events. Okay, it's not just a matter of turning on your screens and just trading sterling. Look for the best pair. Okay, if the dollar is trending lower, well, looking for a weak sterling trade, you're going to get a slight bit of weakness, but it'll stop. These other pairs, Aussie, Kiwi, yen, euro to a point, and dollar CAD at that time will be neutral, and that's when sterling can impact those pairs. All right, guys, I know that's a lot to take in, but slow it down. Look for the best setup and focus on the data, and you got half a chance. All right, guys, have a good one. Cheerio.